Legends, welcome. Legend, well, there he is. Richard, how you doing? Legend, well. Oh, sorry, got a bit of feedback there. Hope everybody's doing well. Welcome to the Daily Buyer Show. We dig all charts as they relate to crypto, something I got to start doing because I noticed quite a few crypto streams have been pulled down. This is not financial advice, ladies and gentlemen. This is my view of the markets for educational purposes only. So I better start saying that at the start. Hope you're all well. It's the 13th of December here in Australia. It's probably the 12th, still wherever you are, except for my mate Richard. Midnight crew. Yeah, got to do the disclaimers these days. So hope you're all well. I hope you're not getting chopped up, right? I hope you're not getting chopped up in Bitcoin in all of this noise that we've been talking about. And all of this pre and post volatility for Bitcoin, post FOMC volatility. Now, if you were here with me on stream, any of the last few days, as these inside bar, outside bar candles have been developing into FOMC, I've been calling out that we've got to be observing the extremes of last week's outside bar, because that's essentially going to tell us how the market is digesting the FOMC first and foremost, but also the potential liquidity conditions coming into the end of the year. So we specifically said on stream yesterday and the day prior that this week, as the market digests FOMC and the dust settles, I'm sitting on my hands because we've already swept last week's high. Okay, so just to refresh, the short-term scenario here is if this week closes as a sweep of last week's high, that would be bearish because that's a failure of bulls to take control of the market and push higher, okay? So there's a demand side failure and sellers are stepping in. Now, considering the macro context that we're in this weekly bearish structure right now, we've got to consider that this could be the formation of the next weekly lower high that heads down into continuation. And it may just be down to here. It may be down further into continuation, or it may be right down here. We don't know. That's the fun of trading, okay? But we've got to consider the signals that are in front of us, and we've got to consider what the chart is telling us, okay? And we said sweep of the highs. If this week closes as a sweep of the highs, then we have to put more probability aligned to bearish price action in the coming week and potentially weeks. However, if we close above this high, and how much strength we close above this high is also going to be important to observe, that would suggest to us that there is some demand, at least in the short term, that's taking control, that bulls are stepping in. So, you know, I guess if you're a lower time frame trader and you're potentially down here in the 5 minute, the 15 minute, and you're scalping your moves, yeah, sure, there's potentially money to be made there, right? But like I said, on this channel, we're here for the bigger swing macro moves. Okay, I'm here to just provide my guidance on how to stay on the right side of the macro moves of these markets. And right now, that is patience, right? And when you're playing these bigger moves and when you're playing with crypto in general, you have to be able to be patient because the market will constantly try to induce you in too early and too late, where you end up just being liquidity, okay? So hence, the thesis remains. I don't want to muck about with any types of trades or stepping in here until I see this weekly close, okay? Once Bitcoin closes on the weekly, I'll be streaming exactly at that time come it'll be Sunday evening for you. It's usually Monday morning for me. And we'll do a nice read on the market at that time. We'll deep dive into the price action to determine what our next bullish is. But at this stage, how I'm leaning is if we closes that sweep next week, I will be looking for short setups. Okay. Now, because we aren't as deep into the retracement that I thought we would have, okay, if we do close next week as a sweep, I'm more inclined to be just targeting back down into these lows, because this could still end up being a bigger choppy range, right? Over the rest of the month. So hence, just calling it out now. I'm waiting for that closing. If I do see the sweep of the highs, then I will be more actively looking for shorts, potentially back down into these lows, and I'll be open to continuation if that's the case, and if Bitcoin just happens to be a lot weaker, well, just very weak in general. Now, if we get that bullish close, that's where I'm going to be more incentivized to do my round the grounds on other charts, other altcoins, and see where the best setups are. And I'll be more inclined to be looking for longs. But again, we just need to keep assessing price action as it's given, okay, and as we collect the data. That's my current bias, remains the same. My macro bias is bearish, right? So hence I am looking for the bigger macro short, and ideally it's potentially somewhere up into the bands, into this weekly fair value gap. That's where I'll be more confident in the macro short down to continuation like levels. I just that chart instinct that I was talking about yesterday, I just in yesterday's stream, I just think if this is it, we could just be in for more chop. You know, we could just be playing the range here, right? We could be coming back up to build up for a bigger move. This could be that counter trend rally that sets in, okay, and then it's the macro move down. So we'll take what the market gives us, and right now that's just how I'm looking at it. Right, so let's go look at a few of the key charts, because we did get the weekly close and we did get more data come through regarding those liquidity catalysts that we've been observing. So just a quick refresher, right? On the catalysts, rate cut's now done. Okay, rate cut in December. Something I want to point out now is, with this rate cut, something that I'm observing is I'm going on to key charts like the NDX, the SPX, the RTY, for example. And what I'm painting onto these charts is FOMC day. Okay, so here on the SPX, so first and foremost, the weekly ended up closing bearish. Okay, we've been talking about the fact that we're potentially in this big distribution. We've got caution signs for distribution, right? That's what we've been discussing. Now, as it stands, the high time frame structure, the weekly is still bullish, okay? And unless we're trading below here, back below this daily low, the daily structure is still intact. But again, if you've been keeping up with me on the previous streams, we've been talking about the fact that in these bigger distributions, like you see here, it takes time. And you see this retesting of the highs. The first cautionary signal are these tests of the structure low, especially when you get these multiple tests, eventually bounces, but we still got a few solid closes down here. That's our first warning sign on the market showing some type of intent to move lower. Okay, so that's where the blinkers go on, and we then start thinking, all right, we better not be overly bullish. We better not just be jumping into the market as we have done on previous pullbacks, because we haven't had these types of structure tests. This is where caution is now warranted. And what does that mean? We got to observe what happens at the other side of the range basically at the key highs, and that's where you see these sweeps and these bigger kind of distribution like price action start emerging, right? Where you get range within a range, you get multiple temps at the high, you get the lower time frame structure shifts, okay? And all the while, if you flick out to the higher time frames, you're getting these higher time frame sweeps, right? So that's basically what's on watch for us as we've been calling out, because the first warning sign was down here, and when we got it across all markets, right? The Dow was a particularly alarming one, because we got 1, 2, 3, 4, 5 closes below the structure low after this sweep. Okay, so hence we've still in this kind of caution area where we got to consider is if it's right now, we don't really want to see the Dow back below this daily level, because then this internal trend, right? Because now we've got the new high, which validates this is the new structure low, okay? And this is the internal price action that delivered this new high. We've got to be observing this low, because that would be our first sign of even just this leg of price starting to break down. And if it's breaking down here, it's usually targeting back down here, which means major structure shift, right? And that, if you just look at how that looks like a distribution, right? That's like a distribution pattern, right? So hence we have been calling this out, that we are on watch. The caution signs are emerging in the bigger global markets. And coming back to the point I was making here when it comes to FOMC, what I like to do is I like to highlight the day that was FOMC, right? Because what I'm just basically looking at here is considering the context, considering the potential liquidity environment. If market participants were anticipating that we are getting looser conditions and their risk appetite is growing, we should reclaim this FOMC level and we should be pushing up, right? Because that's telling us, if you just try to think about some of the psychology behind that kind of move, that's telling us that the market is satisfied with, one, the trajectory of rates and the potential, their appetite for risk is growing because they're satisfied with the liquidity conditions. Okay, now if they reject this FOMC and we start heading down, okay, that tells us that the market isn't satisfied with the liquidity conditions and the trajectory, so hence their risk appetites going down, right? Because if you just think about that, we got a rate cut. So if we got a rate cut and we get a divergence, meaning a rate cut is trying to incentivize risk appetite. You remember that's why the Fed does a cut versus a hike. If they do a hike, they're trying to make money more expensive, so they're trying to contract, right? They're trying to cool down the economy. If they do a cut, they're trying to stimulate risk appetite. So they're trying to stimulate participants in the market. So hence, if they've just done a cut and we start rejecting price from when the cut started, that's telling us the risk appetite isn't there and they're rejecting the trajectory, right? They're rejecting, basically they're rejecting the Fed's trajectory for liquidity, right? And they've got no risk appetite. So hence, this is one that I just like to make note of, especially in these types of contexts, right? Where we've got these mixed signals coming up, where we're transitioning from a bull market from the past, call it 2 to 3 years. So since, call it the 2020, now I'm referencing crypto specifically. Since 2023 to now, we've been in this bull market phase. So hence, we're coming to that point where broad signals are suggesting that something else is happening and we're potentially transitioning to a more risk-off environment more broadly on a global scale. Okay, whether that's a bear market, full-blown bear market, whether that's a recession, I don't know. I don't even need to speculate. I just pay attention to the signals so we can align ourselves correctly. So hence, that's why I specifically look in context now when I lay these things out on a price chart and go, okay, so if the Fed's trying to stimulate risk and they're cutting rates, yet the market is rejecting price, okay, from when it was cut, then that's not really showing a sign of the market wanting to take on more risk, is it? So hence, I'll put that on the chart for there. We'll throw it on for the DJI as well. Okay, and we'll keep these running on our charts because it's important for now. So that's when the FOMC was. And I'm going to run it till the 29th of Jan because that's when the next FOMC is. Okay, NDX down here, we already put that one on. We put on the SPX as well. And let's throw it on RTY, I've already put it there. So we can see that yesterday, okay, closing out the week, or today that would have been for most of you legends, we've had a pretty heavy rejection, okay? That was consistent, yeah, we can see it here, consistent across all markets with a spike in the VIX. All in all, that closed the weekly bearish for everything except for the Dow and the RTY, okay? So hence, we're not out of the woods here, in my opinion, on the caution of distribution risk. However, the higher time frames are still bullish. So I'm not bearish yet. I'm just, I'm neutral. Okay, this is on the indices. I'm currently sitting neutral bearish, I would call it, where the structures are still bearish, but we've got signs of caution. So when I'm neutral bearish, I'm not rushing into long anything. Okay, I'm waiting for the market to show more of its hand. Now, if we take a look at the DXY, the DXY is having a pause after the few days down that we had, right, leading into the FOMC, and the week still closed bearish. Now that's expected considering they are weakening the dollar with that rate cut. However, over the next weeks now, if we see just the DXY charging back up, you got to think in context again. What is that telling you? It means that despite the rate cut, despite the Fed again trying to incentivize risk, capital is still flowing back into the dollar. Hence, it's not going into risk. So that's going to be on watch for us, because if we start to see this now, and again, we'll put that FOMC level on here, and it's the inverse relationship, right? Because if we want to see, for risk markets, we want to see them accepting the Fed's gesture of, hey, be more risky, and charging up. Whereas on the DXY side, we want to see the inverse. We want to see it reject the FOMC and charge down to tell us that capital is moving out of the dollar, okay? Now, whether that's directly into risk markets, maybe it's into other currencies, whatever it is, but typically in a broad sense, in a general sense, you know, that should keep coming down if capital is moving into risk. Okay. Now, again, just highlight that this is that zone that I was that we've been talking about, where once the market starts charging up here, it is just going to be basically replicating the historical cycle ending pattern. Okay, and this is a massive broad market risk off signal, and from here to here is what I've been calling, like, basically from here to here is the play zone, where this should support a risk bid. But beyond here, we need to just make sure we're not blindly assuming that this is a risk bid as well, because this could be a recession or US economy fears. Okay. Now, let me just clean that up. Bit of chart hygiene before we move on. Right, so what I wanted to point out is NVIDIA. We've been talking about this NVIDIA SPX signal. And if you go back and backtest NVIDIA with the SPX, the NVIDIA, especially leading into tops, gives a bearish divergence to the SPX. So hence, I am starting, we've been calling this out for the past few days now, where we've started to see those early signs. We're starting to see more divergence occurring. Okay, to me, still not really confirmed yet, because in the past, the biggest divergence has been the SPX creating a pretty clean high, while while Nvidia's clearly pulled right back. Now here, it's still kind of ranging, and if you actually look at the SPX in candles, it hasn't really created a new all-time high. If I got that right? Let me just change this. Let's have a quick look. Yeah, see? So in the past here, you can kind of see these clearer highs, right? And you got the double test of the highs, whereas here, it's not as clear as a high. Like, it's still... So hence, again, it's an early warning signal. Something that we just got to keep on our radar, because we are seeing like a pretty significant weakness in Nvidia, right? And then we can see it here. And we know that the NDX and the SPX will top last, right? So I still see on X, many people getting tripped up on the fact that the NDX and the SPX are still bullish, so why isn't Bitcoin bullish? Well, if you understand the nature of the risk curve and risk markets, usually the riskiest stuff is going to get dumped first, and Bitcoin's a basically a high risk market still. You know, you can call it a store of value, you can call it all these things, but when we talk about the way that it trades as a high risk market, right? So hence, I just see it. I see it night and day, and I just don't know why some of these people don't just pull up the charts and just look at what happens historically. But, you know, as we've called out, the NDX, the Bitcoin historically is topped 280 days before the NDX. So if you're trying to long Bitcoin for 280 days after it's already topped, geez, you're in a world of pain if you're just looking at the NDX. Hence, we've got this marked on our dashboard here, where the NDX, if it follows the same pattern, it could just keep trending, keep trending up right up until end of Q1, while Bitcoin is already in its bear market, right? So don't fall for that trap, legends, where you're just looking at the SPX and you're looking at the NDX and thinking, oh, it's still bullish, so Bitcoin's going to catch up. It should still be bullish. In fact, I remember last bear market, that's how many people were getting trapped, because, you know, the NDX and the SPX were still bullish and they were just chasing it, saying, oh, it's a massive catch-up trade. Well, not in this environment, not in this context. So that's on watch for us. Okay, so we got the Nvidia given the early signs, and then if we also just look broadly across the Mag 7, see the divergences starting to happen. Apple, I will point out that Apple is actually, this is common behavior for Apple, where Apple actually tops after the SPX quite often, right? So you'll see here, if we just go back, yeah, see how it's a lot more in sync. But I noticed into the major ones. So see here, this is the SPX in blue, right? And it's already declining, whereas Apple here is, it's still declining, but it's not as strong as a bearish divergence. Because, I mean, even the way that I look at Apple as a company, it's a tech company and it's a Mag 7 due to market cap, but it is moving into somewhat of that blue chip-ish territory, right? Where it's been along for ages. They make physical products, physical goods, phone, you know, the whole lot. You know, I don't really know if it's too much of a growth. Sure, maybe it is because it's still in the tech sector, but see how it tops a lot more consistently with the SPX. So Apple is not usually a good leading indicator. Whereas you look at something like Nvidia captures, Nvidia is call it the best proxy on the tech risk sentiment, right? Because you think about the AI trade, and Nvidia represents, is the alpha on the AI trade, right? So if you understand Nvidia's trajectory, you're pretty much going to know the trajectory of the AI trade, and the AI trade is the hottest disruptive trade right now, driving the SPX and the NDX. So hence, yeah, you notice right now it is the fastest signal. You know, you see the divergences. But what I have noticed in this cross-market analysis is that the rest of the Mag 7 will do similar things. They'll either top in line with the SPX, or they'll start their bearish divergences as well. And when you start to see multiple of the Mag 7 giving the bearish divergence along, so you see Nvidia, we've already got it in Microsoft, we've got it in Amazon. Okay, when you see quite a few of them giving the bearish divergence, look at Meta, right? That typically is showing you some underlying weakness that's coming into the markets. Okay, that's based on the historical signals. And I encourage you guys to go and backtest that yourself. You know, just pull up the charts like I did and take a look at it. So where does that leave us right now? Well, if we just come back to what we discussed in the beginning, we're still in the dust storm of the FOMC, right? So we want to let some of that dust clear. We want to let the market show more of its hand. We're calling out the fact that there is some weakness we're seeing initially across these broader markets. We just take a quick look at stablecoin dominance as well. We're still at this pivotal level where if we continue higher, it's going to be a deep bear market, right? So we're quite stubborn here, which shows, you know, quite a indecisive crypto participant right now, because we're deploying, we're pulling back, we're pulling money out of crypto, we're deploying stables, pulling money, you know, like this is just the nature of how it moves. But we've just got to be conscious of this level that we're at, because this is going to be a lot more pain, and that means the macro downtrend will continue a lot sooner, okay, if we head this way. So again, just coming back to our focus on being balanced and being patient in these market conditions, because we're not in the market conditions where it pays to be a bull, and we're not quite in the conditions yet, if you ask me, where it just straight out pays to be a bear either. Okay, so we're in the transitional phase where we are putting in this, you know, we potentially somewhere here or here, we're in this transitional phase where we've just come under the bands, and we are going to start putting in our first major pivot. Okay, that catching that trade and then onwards is where it's going to be paying to be a bear. Okay, but right now, as we're in this transition, okay, so we're in the transition of the V, right? So if price moves like this, okay, now here, okay, this phase, right, is the transitional phase. Okay, so this, I'll color it, I'll put a different color. Okay, so here, so this V phase here, in the first shift of structure, this is the transitional phase where it doesn't pay to be a bull, blindly be a bull right now, because we potentially got a shift in structure. It doesn't pay to be a bear just yet, because we don't have any continuation structure just yet. So we don't know that this isn't just a bigger deviation, right? A bigger market correction yet to keep going up. So when does it pay to be a bear? This is now confirmed bearish trend, right? You got two legs to the downside, and it's going to pay to be a bear now all this time until we get to, right? So we're coming down, we do this, right? Structure shift. Now, again, I'll change the color back to blue here. We got structure shift. So here, right, this point in time, it doesn't pay to be a bear because we've got a potential structure shift, but it doesn't pay to be a bull just yet until we get, right, signals to shift back over. Now we're in bull mode again, right, here onwards. So I hope that makes sense where we're in these phases where be a bull in this phase, okay? Be a bear in this phase, be patient in this phase, okay? And this is where we are. We're in the phase where we need to be patient. Okay, so let's just finish up quickly on that. Just a summary on what we're looking for to round out the week. We're watching, as we discussed, the last week's high of this outside bar. We're seeing if the week's going to close as a sweep or if we're going to get some type of acceleration beyond there. We'll throw on the Bitcoin chart yesterday's FOMC level as well, because that will ultimately tell us if the market is accepting the Fed's gesture to stimulate risk, okay, to take some risk. If we're not and we're rejecting, it's unlikely that the market is taking on risk, and we're probably going to start head lower, all right? So there's two key things to watch right now. Weekly close and throw the FOMC day on your charts. That's it, legends. Hope you like that one. If you got something out of this, please leave us a like, subscribe, follow the channel. Give us a follow on X. That's where I'm pretty active. You can always DM me. I'm always happy to chat charts and take on any feedback. But I appreciate you guys and hope you have a good one. Richard, absolute legend. We'll chat offline. Speak to you soon, mate. Have a good weekend.